What is happening? This is Colin Andrews Egbert, and this is Buying Boring Businesses. But I like to say boring but beautiful businesses because these businesses have some amazing advantages. And one of the categories of boring businesses, quote unquote, is in the manufacturing sector. And the manufacturing sector is something that I've been focused on primarily for the last 4 months. I was looking at other service type businesses. I was looking at a range of things, but I've really focused on manufacturing businesses. And in fact, have one that is close to being under contract, a $20 million thread rolling business, and very excited about it, close to having it under LOI. But that isn't a story for another time. What we're going to be talking about today is, and this is specifically for owners or executives of manufacturing companies, we have an absolute expert here, Tolani Lawson, who she is an absolute expert when it comes to anything accounting. She knows the numbers, and she's not just a quote unquote accountant. She is truly a fractional CFO, as we call it, will help with growth, can help you with exit. So if you are a manufacturer, this is usually the things that we do last as business owners is kind of really focus and know about the numbers. Colony is that person that can help you with the numbers, making sure that you're making the right decisions on a financial side and can help you grow and or exit. So Colony, thank you very much. Great to have you here.
Hi, Colin. Thanks for having me. To be
Absolutely.
here. Yeah.
Great to have you. All right, so let's just jump right into it. So again, this is for folks that are investors, that are owners of manufacturing companies, and a lot of folks, a lot of business owners in general, and manufacturers alike, they just look at accounting as just another expense. They look at their revenue, they look at their expenses, and they see accounting. They look at it as an expense. And why is it that these folks should not be thinking about it that way and how they're actually leaving money on the table by thinking like that?
That's a good question, Colin. So the way I interpret this is good accounting isn't a cost. It's the engine that tells you where your money is going, where it's leaking and where it's growing. So when you start to see accounting as just another expense, you leave margin on the table. You're starting to price based on guesses, not data. You leave cash trapped in inventory because nobody's analyzing your demand or your production cycle. You miss tax opportunities, finance opportunities, and scaling opportunities, most especially because your financials and based on data, and they're not based on decision ready data. They're just, on the fly. A lot of times people are asking their tax accountants at the end of the year, why am I paying more in taxes? That's because you did not start the year, with a proper strategy, or you find out that you're strapped with cash to pay your employees when in fact sales is booming. You're getting more in sales, customers are coming in, but you're cash strapped because there wasn't proper planning in place, right? You don't understand where the money is going, how the cash cycle is moving through the business, things like that. So accounting, especially financial strategy, is not an expense. It's an absolute necessity for any business.
Beautiful. Excellent. I get that. And as a business owner pretty much my whole life, I'm guilty of that as well, looking at it as an expense. And over the last several years, I have looked at it more of like, wow, this can help me out, especially with my self-storage portfolio, looking at how we can take advantage of the taxes, take advantage of the depreciation, all of those different types of benefits. And having somebody like you that specializes in manufacturing, that really helps out owners that are also in the manufacturing side because there's specific cases that are really focused with manufacturers that like a HVAC company or a retail store, they don't have these challenges. So the fact that you focus on manufacturing, that is huge. And that's why I really wanted to bring you on here because as I mentioned, we want to give some great value to manufacturers. So when you are focusing with a manufacturer and you just get started with them, what are some of the things, like what are some of like the first three, let's say, most common money mistakes that you see manufacturers make?
They are typically in three areas. The margin, either your margin is not right because of the way you're pricing or the way you're costing your goods. The margin, the inventory, and then the cash flow. Cash flow is the oxygen of the business. If your cash flow is not right, if your cash cycle is not moving correctly through the business, you basically just starve the business of oxygen. So those are three main areas that I'm, microscopically looking at. So let's start with margin. What's your margin? Do businesses truly know their margin? By customer, by product? Do you know which customers are bringing you the best margin? Or do you know what product line is bringing you the best margin? So a lot of manufacturers fall into the trap of just recording all of their expenses, right? You make a sale, you record that as a sale, you go out and you purchase material or you purchase whatever else. You're running on a cash basis, but you don't really understand what your true cost by product segment or by customer is. You have some troublemaker customers that you think they're bringing you money because their order volume is quite high, but they could be costing you a lot in margin if you're not tracking those kind of expenses that way, in a way that an experienced accountant or an experienced financial analyst will be able to. And then talking about inventory. A lot of money gets tied up in inventory. And inventory is not just about accounting, it's about having the right people. So I focus on manufacturing because of the nuances in the industry, and inventory is one of those nuances. You have to really understand how to run a just-in-time system, how to forecast your demand in a way that makes your production line, your production units flow efficiently from the point where the customer places the order to the point where the order gets shipped out the door. How is that flowing through the business? How is that inventory flowing through the business? And at what point is it sitting on the shelf and for how long? So really understanding your inventory and how it flows through the business. A lot of businesses they have a 30-day lead time, 180-day. It can go anywhere from 30-day lead time to 180-day lead time. So how are you managing all of that? And then the last is the cash cycle. And this is where it gets really interesting because I mentioned cash earlier, and I'm going to continue to mention cash a lot throughout all of this. But look at it this way. You're taking out money to go buy material today, but then you're not going to complete production for, say, another 2 weeks. And then your customers are not going to pay you for another 60 to 90 days. So you're about 4 or 5 months out from getting that money back when you go out and spend that money today. So understanding your cash cycle, how things are going out, the timing of when that money is going out, and the timing of when it's going to come back in helps you understand when to invest in your business. You think you have a lot of cash on your bank account right now, right? I have a lot of cash balance. I'm going to go buy an equipment, but what's going to happen in 2 months' time? That's what understanding your cash cycle tells you. So those are the 3 areas. I've got a long-winded way to tell you. Those are the 3 main areas that we look at.
No, that's great. That's a great explanation on those 3 different topics. You mentioned this, I believe, on the first one when it comes to cash basis accounting. Can you kind of talk about, because I know a lot of owners still operate on a cash basis accounting. When is it, at what point does that start really causing problems as the company grows?
I'll say as you start to get to $2 million, $3 million in revenue, the complexity of your business starts to increase and cash basis becomes dangerous. The reason for that is cash basis hides the true cost to produce, and it will cover up your margins. So it creates blind spots in the business in a way that you can't really see your profitability. I started to explain earlier, you are going out there and buying goods and just recording it as a cost, but you're not necessarily tying it to the customers that are purchasing those items, and you're not tying it to the product line that you're using as end products to create those items. So at the end of the day, you don't even know which customers are costing you the most money and which ones are making you, the best.
Got it. Great explanation. So moving forward, let's talk about the KPIs. So every manufacturing, they have certain numbers that they need to be looking at. What would you say if they just have one page of numbers that they look at each month? Let's say, what are those key figures that they should be looking at that's on that page?
You know what I'm going to say? The first one, cash.
There you
It's
go.
always cash, your cash
Show me the
runway.
money.
Yeah, your cash runway. And what does that mean? How many weeks of cash do you have left? I love to talk about cash, not in dollars, but in time. How much time are we going to be able to run with the cash that we have now? What is out there that we're expecting to bring back in? And how good are our customers at paying? So number one is cash, and number two is your AR aging. What's AR aging? That's your receivables. Almost every business out there, you're going to have someone who's going to owe you money. But how quickly are they paying you back, and how well are they paying? How good are they at paying you back? So that's very important to track. You don't want to leave money out there, too long. You want to make sure that you're chasing up on those. So those are the first two KPIs to track. And then your gross margin by product or by customer, because you want to know where to put your energy in the business. You want to know where to invest your time, right? And then labor efficiency and machine utilization for manufacturing businesses. Your labor utilization helps you understand how well your labor force is running. So if you're paying a lot of overtime, is it time to maybe add a new shift, or is it time to bring on a couple more new employees? That just helps you understand some of those things a little better. And then the last item I'll put on the list will be inventory position. Just understanding what your turnover, how quickly you're turning inventory over, what's your slow moving inventory, and how quickly are you turning inventory over on the average. Then if I will add a bonus one, it will be understanding your current revenue compared to your plan. I don't want to call it budget because that's going to scare some people off. So I'll say plan. Everyone has got a plan. I plan to go to Thailand in 2 years' time, whatever. So what's your plan for your business? You want to make 20, 50, whatever number that is. How well are you doing against that plan?
Excellent. And let's say, a lot of these owners, they'll say, we'll clean up the books later. I know that's a response that a lot of people have. I've actually had that response for businesses that we've had, we're focusing on revenue, we're focused on putting out fires. That a lot of times we'll clean up the books later is a very common comment that owners will have. So what would be the most expensive surprises that you've seen when that later finally arrives?
The later are two big things: tax, your tax bills. And that goes back to what I said about don't wait till the end of the year to start thinking about your taxes. Think about your taxes from 1st of January. How can I plan my business in a way that minimizes my tax bills? That's why you don't wait till the end of the year to do your books. You start to do your books from day one. And then your cash shortfalls. A lot of businesses are surprised when they run out of cash, but cash should never come as a surprise to you. You should always have a plan for your cash. And then other things are just inventory sitting on your shelf that you did not see coming, and you're having to write off your inventory, or your margins, how much you think you were making on a specific customer, on a specific product line. It's just not as much as you thought. And at the end of the year, you find out that, oh, my profit is a lot lower than I thought it would be.
Got it. And what would you say the biggest gap between a typical manufacturing CPA delivers and what the owner really needs to grow or eventually sell the business?
A typical manufacturing CPA and what the business needs to grow, that's a very interesting question, because the different kinds of CPAs. There are the ones that are just, super focused on the books, super focused on the numbers. They're almost more just bookkeeping. That's all they're doing for you. They're keeping your books. And then you have your financial partner, your strategy partner, someone who is coming in and focused on how you're going to grow as a business. They come in and ask you, what's your plan for your business and where do you want to go? And we can build a roadmap together in terms of how to get there. A fractional CFO or a strong fractional CFO in the manufacturing world is not there to just record your transactions or organize your numbers. They're there to help you interpret those numbers and build financial strategies that will accelerate your growth, right? They're there to help you model decisions. Is it a good time to buy new equipment? Is it a new time to move into a new building? Help you model those kind of decisions to say, these are the different options that we have, and these are the options that we can weigh. And then they will help you align your finance to your operations. A lot of people see those things as two independent points, but your operations, your shop floor should imitate your numbers, and your numbers should imitate your shop floor. Those two things really should work hand in hand.
Excellent. And just kind of a follow up on that, is there any other additional services or help or strategy that you have done as a fractional CFO that even a higher level accountant doesn't do?
The biggest one will be the growth strategy. That's what your typical accountant wouldn't do with you. It's not just about recording and understanding the numbers, but analyzing and modeling the numbers in a way that is responsive to your specific business needs. So it's not just random numbers. Its numbers are going to be very specific to your business and very specific to your situation. It's tax strategies that are very specific to your own individual business. So analyzing your business and understanding your business in a way that allows us to start implementing a lot of these strategies. Now, this isn't like a week's work or a month work. It's a long-term relationship, but it's the kind of relationship that we continue to build on gradually in a way that, gets you to your overall business goals.
Excellent. And Tolani, where can people find you? They're interested, they want to talk more about what it is that you can help them with. I know that you generally focus on businesses that are between $5 and $50 million in revenue. Maybe they're not at that point yet, but they want to get there. Maybe they are there, but they need more help to get to the next level, or potentially they're looking to exit soon or within the next couple years, and how you can help them really get there and not have that, I'll get to the books later. How can folks find you?
Well, find me on our website, www.fiscal12.com. So that's fiscal, like your fiscal year, FISCAL, and number 12, fiscal12.com. That's where to find me, or look me up on LinkedIn, Tolani Lawson, and I would absolutely love to talk to you about your financials and help run your numbers and see where your business is going.
Awesome. Well, hopefully the folks that are listening to this, they saw and got a small little glimpse of what it is that you know and what it is that you can offer to these folks. So, Tolly, thank you so much for joining us on this short discussion, and I look forward to continuing to work with you. I can't wait till we start getting some of these deals closed so we can actually have you as a provider and as our fractional CFO. I look forward to that day. We're getting closer and closer. So, Tolani, thank you very much.
Thank you so much, Colin. It's been a pleasure talking to you.